Welcome to DeFi Crypto Today. Our topic today is black boxes and how to learn to avoid them. Right now, there are lots and lots and lots of black boxes that are shutting down all over crypto. And we're going to have a look at what I mean by black boxes. And I want people to be aware of them before they put their money there. Black boxes are bad. It's not a word for it. Okay? Let's have a look and see what I mean by black box. So what's a black box? So we got a little illustration here. And for instance, you can put your crypto in the black box. We don't know what's happening in here. That's why it's called a black box. They don't tell us. They tell us sometimes what they're doing with the money. Sometimes they don't tell us. But we have no way of verifying if what they're telling us is true or not. This is a mystery here. Okay, it's a mystery box. And then they claim we're going to get 20% on USDC. And they say, wow, 20%, that's great. I'm going to put my USDC in there, or my Ether, or my Bitcoin, or my whatever. Right? And a lot of places do that. And black boxes go against the basic principles of blockchain and crypto. Okay? They use crypto. They abuse crypto, okay, and they abuse your trust, okay. This should be permissionless. This should be transparent. It shouldn't be opaque like this. This is opaque. We cannot see what's inside the box, okay. Blockchain, normal blockchain transactions, you see all the transactions that happen. Okay, we can read the code that's inside the protocol. The code has been audited as well. Okay, but the code is public. And then we can see if what they're telling us is true or not. Right now, we have no way of knowing. And there are lots of protocols like that, and there are lots of financial institutions that are using crypto that are acting like this. And right now, there's an epidemic of failures, okay? There's like companies that build their black box at the tune of several $billion, okay? 10, $20 billion, and now they're crashing down on each other. Why? Well, we had no idea what they were doing with our money. And in some cases, they were going against regulations and doing things that were illegal. Okay, like the case of 3 Arrow Capital, for instance, they were doing illegal things. They're going to be reprimanded quite a bit. Some people might go in jail in there. All right, so let's have a closer look at what I mean by black box. The black box model receives input, in this case, let's say USDC, and produces an output. In this case, let's say 20% return. But its workings are unknowable. We don't know what's happening here. They're not telling us, and we have no way of knowing what's going on unless we work there. Okay? Now, most CeFi, centralized finance models, are black boxes like Binance, Coinbase, Celsius, BlockFi, 3 Arrow Capital, etc. So you have to be aware of that, okay? We don't know what these fine people do with our money. In the case of Coinbase, we have a little bit more of an inside look because it's a public company. And they have to disclose a lot of information in their filings at the Securities and Exchange Commission. So Coinbase is a little bit less of a black box, but still, they're going to practices that are not open to the public, okay? They're going to do things that are not open to the public, that are not open to your scrutiny, okay? And that goes against blockchain and crypto tradition, okay? Or basic principles, I should say. Now, many black boxes pretend to be DeFi, like you're going to see like Celsius, BlockFi, and so on. They claim to be DeFi. They're not DeFi. They're using DeFi, other protocols that are DeFi, but themselves are black boxes. So they are themselves black boxes, although they are using DeFi to generate the output here. Okay, but they don't tell us exactly how they do it. And then there are also other black boxes that pretend to be DeFi, but you don't know what they're doing with your investments, such as they look like DeFi. They do look like DeFi. You got Drip, Titano, and then you got Freeway, Strong Block, and Yield Nodes. Freeway and Yield Nodes are closer to CeFi, the way they're designed. Okay, and they're total black boxes. I have no idea what they're doing. We're gonna have a look at their websites, and you're gonna see it's impossible to know what's going on inside there. All right. Now, here, why are black boxes bad? As I said earlier, the biggest problem I have with them is that they're opaque. We don't know what they're doing with our money, and that worries me. And in many cases, I have good reasons for worrying, okay? So what we need, okay, the best is to have transparent and decentralized, permissionless protocols. That's the best. So here, I give you two examples. You got Uniswap, you got Yearn. Those are real DeFi. They follow the principles of blockchain and crypto. They're transparent. You can they document exactly what they're doing. Okay, if you read their docs, they're audited. Their code is public. Okay, you can read the code for yourself if you're a programmer, and you can check that what they claim is true. That's what I mean by transparent. Okay, here you got. I put the example of Terra here. Terra was a little bit opaque. Okay, we didn't know exactly how they generated the 20% return at Anchor. Okay. I made assumptions when I invested there, and I was wrong. Okay, I made bad mistake of investing in the Terra ecosystem. Okay, they were hiding things from us. The whole thing collapsed when they got attacked. Then you got Drip, you got Titano, you got Strong Block. There's no way of knowing what they're doing there. They say they do something. We can't verify it. It's not open. Okay? And that's why I don't like it. These are decentralized though. So you get decentralized, permissionless systems. So you can take your money in and out of all these, whenever you want. Okay? They're not locked in. Drip and Titano have very heavy taxes that they charge to discourage you from withdrawing your money, but you still can take your money out anytime you want. Okay. Now, then you got worse. Okay, you got centralized or permissioned systems. So you got like traditional banks. Okay. And you got some regulated CeFi, which are transparent up to a point. Okay, they're not fully transparent, but they are transparent up to a point because they have to file a lot of documentation with the government. In the US, they have to file with the SEC, they have to file their taxes, their revenues, so they have to publish annual reports. That detail what their operations are about, and so on. So you have some information. It's not fully transparent, but there's a little bit more transparency there, and that's why I put it in the transparent column. And then you got opaque systems, all the CeFi where you have to register your ID. Okay. So Voyager, BlockFi, 3 Arrow, and so on. These are not fully regulated, and because they're not fully regulated, They don't disclose a lot of information, okay? And that increases your risk. Okay, so the highest risk is here. There's a little bit less risk here. There is a lot of risk here, and there's a bit less risk here, okay? The least amount of risk is over here. When I'm talking about risks here, it's not risk of market risk, okay? That's separate. So the market can crash, you can still lose all your money on Uniswap, okay? If you bought Bitcoin at 60,000 and drops to 5,000, yeah, you're going to lose most of your money. But that's not Uniswap's fault, okay? Here, you can lose all your money, okay, whether or not the market crashes, okay? Same here. Here, less so, because they're more regulated, so there are systems in place to protect investors. Here, there are no systems to protect you at all, and here as well, okay? Here, what protects you is the transparency and the fact that it's permissionless, okay? So the different kinds of protection. The government doesn't protect you here. Government doesn't protect you here. Your protection is the transparency. Okay, so you can read the code, you can check that whatever they're telling you is true. Okay, you can see all the transactions on the blockchain. Okay, that's what I mean. All right. So black boxes are not transparent. We don't know what they're doing with our funds. How do they generate the yield they promise to give you? Secret trading techniques. I see that on some websites. So I'm like, okay. As soon as I see that, okay, they say, people ask on their website, they have these questions. How do you generate 20% on Bitcoin? They say, oh, we have these secret trading techniques. Right. Sure. That's fake. As soon as you see that, that's fake, and you run away. And I'll explain that in a moment. They've got these imaginary nodes, like Stronghold and Yield nodes and a bunch of other places. There are real nodes, and I'll show you real nodes. And I'll show you the fake nodes. Stronghold's a fake node system. I don't know what they're doing with the money. I really don't. I examined the system. I thought for a while maybe it was good. And I'm totally convinced it's a scam. Okay? Redistribution of investment through form of fees or taxes. That by itself is not bad. A lot of protocols have that. But if that's the only source of revenue, then that's bad. Because it's not revenue. It's just redistribution of money in the pool of investors. Okay? You steal from Joe, you give to Jack, and then you steal from Jack and you give to Paul, and you steal from Paul, you give to Peter. Okay, you're not making more money. The amount of money in the pool is the same until people withdraw. Okay, and to avoid people withdrawing too much, they charge very, very heavy taxes. So it tries to keep money in the pool, and they try to attract more people in the pool by saying, "Oh, you're going to get 1,000,000% or something like that." All right. Now, do not believe anything that cannot be verified on the blockchain. If people tell you whatever, they're going to get 20% on your Bitcoin, I'll prove it. If they can't prove it, don't invest. That's simple as that. Now, CeFi can forbid you from withdrawing your funds. Right now, a lot of CeFi companies like 3 Arrow Capital, BlockFi, Celsius, and so on have stopped all withdrawals. So maybe you put, I don't know, your life savings in there. You put, I don't know, $100,000 or $50,000 or whatever you put in there. Okay, and you said, oh, wow, I was getting 10, 20% on my savings. And because they played with your money in ways you don't even know, you can't take the money out now. That's great, right? And not only that, they can use your money to pay off their debts, and you're left holding the bag at the end with nothing in the bag. That's why I want people to avoid centralized institutions, okay? Because Even Coinbase revealed that in their latest filings at the SEC. Okay, whatever funds you put on Coinbase, if Coinbase has debts, they're gonna take your money and pay off other debts first before you. You're the last one in the line. Okay, maybe there's I don't know, a million creditors. Okay, you're going to be the last one paid. Okay, because they're going to borrow from big banks first. They're going to borrow from smaller banks next, and then they're going to borrow from other major investors first. And you're the tiny guy at the end of the line. Okay, the other guys have priority because they sign a contract that says you pay me first. Okay, when you deposit your money on these centralized institutions, the contract you have with them tells you you're the last one on the line to get paid. Okay, remember that's crucial. Okay, and a lot of people are losing their shirts right now on BlockFi, Celsius, 3 Arrow, etc., because they did not know that. Okay, so it's quite a bad situation. CeFi can use your funds to pay other creditors before you, and you're left holding the bag, as I just said. All right, now here's something you need to know and remember for the rest of your life. Any rate above 10% is not sustainable long term. Any rate of return above 10% per year is not sustainable long term. It's not possible. It never happens. Never. Yes, never. Okay? You cannot make more than 10% return on anything, anywhere whatsoever, forever. Maybe for a year or two, but it's going to crash at some point, and long term, you're going to get back to 10%. Okay? This is the S&P 500 historical annual returns. As you can see, some years was above 10%. You got like 30+% here. And it did happen a few times. But you also have these crashes of minus 30 and minus almost 40 here. And, you know, there are economic cycles, okay? Things go up, things go down, things go up, things go down, okay? But overall, since the 1950s, since the S&P 500 was created, okay, the average compounded rate of return, okay, the average APY per year is 10%, not 15, not 20, not nothing else. It's 10%. Okay? So any place that guarantees you rates above 10% is lying to your face. They can't do it long term. They can do it short term. For a few weeks, a few months, maybe a year at the most, okay? But longer than that, they're lying. And they're trying to scam you, okay? Most rates over 10% advertised anywhere cannot be sustained for more than a few weeks or months. The S&P 500 index is the only long-term play for an average 10% compounded annual return. That's the only place you can get that. It's the stock market, okay? The general index on the stock market. The only place. There's nowhere else you can do that. Okay, some people are going to say with real estate, blah, 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 blah. But still long term, it's still going to be around 10%. It's still going to be around 10%. It's extraordinarily difficult to do better than the S&P 500. Okay? Of all, there's at least 10,000 exchange-traded funds out there on the market. Okay? At least 10,000. 99.9% of them are doing worse than the S&P 500. Warren Buffett had a contest. I think he wanted to give like $1 million or something like that to any fund manager that could outperform the S&P 500. Nobody was able to claim the prize. It's as stupid as that. Okay, you try, you're very hard. Okay, you study the market, you look at the balance sheet, you look at the filings of all the stocks. Okay, you try to predict where the economy is going, blah 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 blah, and you have like master's degree or PhDs in economics and whatnot, and you still can't perform the dumbass S&P 500 index. Okay, think about that. Okay, most mutual funds that charge you very high fees, okay, and they say, oh yeah, we're going to give you the best return and so on, they're scams also. Okay, they're not exactly black boxes, they're almost black boxes. Okay, and they are regulated by traditional finance institutions and so on, by the government and all that. But they're still scams. Okay, the only investment funds that I don't think are scams are index funds. Okay, there are lots of index funds, and many of them reflect the S&P 500, and they charge very, very small fees. Okay, because, well, you don't need a brain to follow the S&P 500 much. Okay, it can be all automated. All right, and that will give you a 10% annual return, long term. Of course, some years you're going to lose money, but that's normal. Okay, but that's what you need to understand. Okay, it's not possible to generate more than 10%. It's just not. Everybody wants some miracle that will make more than 10% long term, and it never happens. It never freaking happens. Okay, you're going to have some venture capitalists and everything, and they're going to make a ton of money for 2-3 years in a row. But right now we're going into a recession. They're all losing their shirts. Okay, and that's what I mean by that. You can have, 2-3 good or great years. Okay, you're going to make like 20%, 30%, and then you're going to have a year where you're going to lose 50%. Okay, you cannot, it's waves. Okay, the waves cannot always go up. They have to come back down at some point, and that's what you need to be aware of. Okay, so if long-term rates over 10%, oh my God, I keep moving. If long-term rates over 10% were possible to get, we would get them from traditional finance. As dumb as that. Okay, it's as dumb as that. Okay, you'd be able to go to your bank, and they would have the 15% guaranteed return forever. Okay, at your local bank on the street corner. If it was that easy. It's not easy. Okay, it's really not easy. Okay, no, there's no brain that can beat this. Right now, there's no brain that can beat this. There's very small number of mutual funds, okay, or investment funds that beat the S&P 500 consistently. I think there's less than 10 out of 10,000. Okay, and they're black boxes. They don't explain what they're doing very well. Okay, and they're limited, they're restricted to special groups of people and blah blah blah. And they're not accessible to everybody. All right, so maybe they've got a special recipe. Okay, but that's very rare. That's extraordinarily rare. Okay, and I still don't trust them. I still don't trust them. Maybe they sell drugs on the side. I have no idea what they're doing. Okay, but trust me, 10% is the best you can get anywhere, okay? Long term. Short term, yeah, you can beat that easily. But long term, you can't beat 10% APY long term. Okay, this is 50 years, a 50-year chart. Okay, as you can see, it's got its ups and its downs. Okay, some years you earn nothing. Some years you lose your shirt. Okay, and some years you think that you're a genius because you're earning 30%. Okay, but the market will make you feel like a genius when it's going up, and the market will make you feel like a loser when it's going down. Okay, but that's the market. All right. So how can you select good DeFi projects? And I'm saying DeFi here, decentralized, because I want them to be permissionless and decentralized. Okay. Well, use DeFiSafety.com. I should have put it up here. I'll show you the website again. I've talked about this website a million times already. Okay. It says your number one source for technical data and DeFi, and it's really a very, very good source. They reviewed over 240 protocols, DeFi protocols here. Okay. Now, they've got, let's say, Curve Finance right now. It's got an overall score of 93%. That's excellent. Okay. If you look at general protocol reviews. All right. So some fail. Okay. 46% is a failure. Anything below 70% is a fail. Okay. You want over 70%. Like here you got DYDX. It's excellent at 93%. So it's a good place to look for good yield, okay, with a reasonable amount of safety, okay? But here it's safety in terms of the coding, the security, and so on. So if you look at the details, what you see, you got an overall score of 93%. The smart contract, the team is excellent. The documentation is perfect. The testing is very, very good. The security is excellent. Admin control excellent. Oracles are excellent. So that's what you're looking for. Okay? These are all kinds of places where there's risk outside the market risk. So you can still invest at DOPEX and lose your shirt. Okay? But at least it's not because there were bugs in the contract or the documentation was terrible and there was no security and no testing and so on. You see what I mean? When you go to another place, see, PancakeSwap has a low rating of 54%. The documentation sucks. The testing is not good at all. Security is okay. Admin controls is bad. There's no Oracle. Okay, so you got to know, here it says fail, because it's below 70%. So you got to understand what these mean, okay? And you can read the full report to understand more what's going on at Pancake, okay? So, and Pancake is one of the top DeFi projects out there, okay? It's a massive, massive project, but it's got a terrible rating here, okay? So if you invest there, be aware of the problems that could happen, okay? All right, so let's go back here. Make sure you understand how the yield is generated. That's the most important, okay? If you cannot find out, or if you don't know how the yield is generated, you are the yield. What does that mean? They're stealing your freaking cash. That's what that means. Okay? Read the white paper to understand how the yield is generated. And even after you read the white paper, maybe you discover that it's trash. Okay? Make sure you can check that the yield is truly generated the way they claim it is. Okay? At Titano, they claimed that they were investing in DeFi projects. Right. I looked at their wallet. They're not investing in anything. All the money is sitting as BNB tokens. They're not earning yield anywhere. So they're lying to our faces. If the yield promise is constant, avoid the project. If they say, oh, we guarantee you 20% on your Bitcoin, run away. Okay? Nobody can do that. Nobody can promise a constant yield forever. It's not possible because everything fluctuates in the market. Okay? Learn that. Okay? Why do you think every day they publish where the stock market is going and where Bitcoin and Ethereum is going? Because they fluctuate. Okay? They go up, they go down, they go up, they go down, they go up, they go down, and that's the way it is. Okay? That's the way the market operates. Okay, prices will change every few seconds. All right. If they have a paid referral system, avoid the project. Most projects that have a paid referral system, they tell you, okay, refer us some people, and we're going to give you a reward. Okay, we're going to give you some money, some tokens, or something. Most projects that do that, not 100%, but like 99% are scams. Okay? So far, I have not found a legit CFI or DeFi project that has a referral system. There must be some, but I haven't found them yet. Okay? Black boxes are often Ponzi schemes that constantly require new investors to stay afloat. A Ponzi scheme is, okay, a pool of cash, but they promise a high rate of return. And the return is not a real investment. It's just taking money from Jack to give to Joe, and taking from Joe to give to Paul, and taking from Paul to give to Peter. Okay? That's all they're doing. They're not investing that into anything that generates income. They're not lending the money and collecting interest on them. They're not putting it in options and trying to collect fees or anything like that. They're not doing anything like that. Okay? And that's why it's a scam. All right. If the only source of yield for the project is transaction fees or taxes, avoid the project. Titano, drip, and so on. That's their only source of income. Okay? Read the documentation, and that's what you discover. High yield investment whose only source of revenue is charging you for deposits and withdrawal fees are scams. Fees are fine if they are only a small part of the income sources. So you can charge taxes and fees for people that deposit or withdraw, and that's fine. Okay, I don't like it most of the time, but it's fine. If there are other sources of income. Okay, are they making money in other ways? Are they selling NFTs? Are they lending the money? You have to play a game and there's a fee to participate in the game or whatever. Okay, if there are ways for the protocol to generate income other than those taxes, that's fine. Okay, that's allowed. Okay, you can still lose your shirt, but at least they're not dependent 100% on fees and taxes. Okay, so watch out for that. Avoid unregulated projects that ask for your personal identification, especially financial information. Unregulated centralized organization could misuse your personal identification and financial information. Do not give financial information to any organization that is not legally entitled and required by law to obtain them from you. At the bank, they ask you for a bunch of financial information. They want your social security number, they want your address, they want to know, they do a credit check, they do all kinds of stuff, okay? And that's fine if you want to do that because they're regulated by the government. If they abuse that information, they can be sued and shut down, Now you've got these companies, some of them I'm going to show you today. And I don't trust them because they're not regulated by anybody, and they're black boxes, and they're not DeFi. They claim to be, but they're not. Okay, they're lying to our faces. Now, the biggest problem is that they could steal your ID and your money. Okay, identification theft is rampant. Okay, there are people that steal credit card numbers, they steal bank account numbers, they steal all kinds of stuff, okay, to make money off your backs. So avoid them. All right. So let's have a look at some examples. I'm going to go quickly through them. Here, there's some. I'm putting the links to all this stuff below. So here they explain more about the black box model at Investopedia. Okay. You've got the same thing at Wikipedia here. Okay. Now, Three Arrow Capital files for bankruptcy. Why? They're a black box. Okay. They were outrageously borrowing. They were using your money, okay, the money that you invested in as collateral for to borrow money and try to generate income. There's nothing wrong with that, except that they went way overboard, okay, and they had no safety measures put in place, okay, and they did all kinds of deals. They borrowed from everybody and their mother to try to stay afloat, and the entire house of cards collapsed. Okay, there's not going to be anything left. Okay, and the investors that have put their money there, I'm pretty sure they're going to be left with nothing. Then we've got Voyager halts trading and withdrawals after Three Arrow Capital defaults. Well, because Voyager lent money to Three Arrows. That went well. Three Arrows reportedly owes Voyager around $646 million worth of crypto. Great. Now that money is gone. So Voyager is going bankrupt too. You see, it's like a domino effect, okay? And then you got BlockFi, same deal. BlockFi, FTX agreed new credit deal and acquisition terms. So BlockFi is failing. And now it looks like it's possible that FTX US buys them out, okay? Probably at a penny for the dollar. All right? And then here's the thing I really don't like about BlockFi. This. See, you can put your Ethereum here, and they're going to give you up to 3.5% APY. Okay, I'm going to show you Lido. Lido is a real DeFi project. It's very highly rated at DeFi Safety, Lido. All right, 92%. Okay. So if you look at the details, it's got an excellent score across the board. Okay? So that's a good DeFi project. It's transparent. It's permissionless. Permissionless means you can take your money out anytime you want. And if we look at Lido here, right now, they can give you 4% APR on your Ethereum, 5.4% on Solana, 21.2% on Kusama, 8.7% on Polygon, 16.5% on Polkadot, and of course, well, anybody that had money on Terra lost their shirts. Okay, so at one point they were also offering Terra. But, so even the smart people at Lido got scammed by Terra. Anyway, now the rates that you see advertised here are not constant. Okay, they will fluctuate, but that's what they are at the moment. Okay. Now, where should you put your money? Here, where it's permissionless, and at the moment it's giving you a pretty good return on Ethereum at 4%. Or you're going to go to a black box like this, where your money is going to be locked up. And if these guys go bankrupt, they're going to take your money, pay their preference debts first, and leave you with an empty bag. You see what I mean? Don't trust companies like these. All right. Next, Celsius. Okay, and here they explain the story behind Celsius and everything, but it's losing money left and right. And right now, withdrawals are locked. You can't take your money out of there. Okay. And right now, this is the article that says Celsius enlists more advisors to help with potential bankruptcy. You can be sure they're going to go bankrupt. Okay, they can't pay their bills right now. They borrowed too much, and they're getting liquidated left and right, and nobody's happy with them right now. So, unfortunately, if you have money there, it's gone. So you get a tax loss. All right. Then let's look at other projects that I really hate. This is one of them. Yield nodes. Yeah. You're going to see some influencers, and some influencers that I highly respect. Unfortunately, they're promoting shit like this. Yield nodes, profitable and proven crisis safe. Oh, yeah. Proven. See, you have to sign up, first of all. Okay, if the button works. So you're going to have to register. It's not permissionless. You have to register. You have to give some private information. And then you're going to have to... Oh, I'm not going through this crap. All right. So anyway, they're going to take your money. They're going to put it in a black box. And they're going to say, oh, yeah, we are going to generate X return. Okay. So they say income generated for June, 6.1%. Okay. Integrated projects contributed to the yield, 19. Which ones? I don't freaking know. They got a master noding alternative with POS staking, whatever the hell that means. There's no such thing. Okay. Lido here, all right, has nodes. Real nodes. Okay, they put money on Ethereum or on Solana or Kusama or whatever. Okay, and they set up nodes, and they also work with other groups that have nodes. Okay, to try to become more decentralized. Okay, and they pull their funds together and they generate that yield for you. Okay, and they take a fee on the yield. Okay, that's how they generate their income. And Ethereum is probably going to go down the drain soon because it's going from proof of work to proof of stake. So that's probably going to disappear soon. Okay, and then you're going to be left with the rest. But these are real nodes. Okay, this is proven. Okay, they've been verified. And that yield node thing, it's like, see now you have to give your first name, your last name, email address, your phone number. Right. Yeah, I'm going to give a phone number to like whoever those guys are. Okay. I mean, look at the page. Okay. Look at the page. Yield node is a complex multi-tiered node rental program based on new blockchain-based economy. Blah, blah, blah. So revenue is generated through a combination of master noding, price gain, and services that work in unison to leverage each other in their own ecosystem. Okay, that sounds all very scientific, right? But where is it? Okay, where are those nodes? Okay, here they tell you your minimum deposit, 500 euros, maximum deposit, 250,000 euros. They accept all these payments and so on. They pay you profit every month, blah, blah, blah. It looks great. Master noding, they don't explain anything if you actually read it. All right, and this is the people on the team. At least we got, they seem to be doxed. Okay, and then You keep on going and going and going and going and going and going and going. They've got these partners apparently, and see they got to contact us, and yeah, it's supposed to be in Hong Kong. Now I don't know if you've been to Hong Kong. Okay, but an address like this, okay, anybody can have that. Okay, this is a rented place where anybody, okay, you have these, can I explain this? You have these serviced offices, okay, where you have a company that manages desks for a bunch of offices, okay? So you can rent a little desk, okay, and you can see your head office is there, okay? And that's what it is here. They're not regulated by anything. Okay, if you look anywhere on the page, it doesn't say that they are regulated by the Hong Kong Financial Authority. I'm not putting my money there. There's no way I'm going to put my money there. Okay, it's not. It's not real. It's not real. Same thing with Freeway. So they got a supercharger, whatever that is. Okay. And let's go from the top. So that 43% annual rewards. Wow. And again, it's like they don't. How is it generated? We don't know. You got these superchargers. Earn up to 43% on Bitcoin, Ethereum, blah, blah, blah. What? Nobody can give 43% on Bitcoin and Ethereum. Nobody can. Okay? Earn up to 21% on some of these, perhaps. And on gold, really? Okay. See, it makes no sense, this stuff. Okay. It makes no sense. They don't explain what a supercharger is. Okay. It's just a name, okay, that sounds good. Okay. It says you want more protection. They got new regulated accounts from their prime brokerage, Orbit Prime, yeah, wherever that is. Okay, there's no link to it. There's nothing to click. Okay. Here you get started. They're going to ask you for personal information as well, and so on. And we keep going and going and going. Okay, these are the lovely people behind it. And where the hell is it? Okay. In Estonia. All right. So we're going to have to go and check in Estonia what this company is about. Okay. I don't trust them. They don't explain anything about their supercharger. Okay, and as I said, if it was that easy to get 43%, everywhere we would be getting 43%. It's not possible. It's not. Okay, as I explained, the S&P 500 is about the only place we can get up to 10% a year. No one else can do that continuously forever. Okay, above 10%. Nobody can. Then you got strong block here. Another one. Okay, and now they're migrating. They got a new kind of node, blah, blah, blah. And they're doing terribly right now. For a while, everybody was very excited during this time here. Okay. I mean, the token went up to, almost $1,200. Now it's down to, $7? Okay. Yeah, I mean, everybody's a genius when the price of the token goes up. Okay, everybody's a genius. It didn't last. Okay, because again, it's a black box. We don't know what they're doing with our money. They claim that we're putting money into nodes. Okay, but all they're doing is they're taking our money and then issuing tokens. Okay, basically the only thing they're doing is selling us their strong tokens, And they claim that they're putting that into nodes, Ethereum nodes, which is not verified. Okay, there's no auditing of that. Okay, there's no external auditor certifying that they've got, I don't know, 75 nodes or whatever. Okay, and don't forget, they're on Ethereum, and Ethereum is moving from proof of work to proof of stake, and nodes are going to disappear at that point. So how are they going to generate any income? No way to know. All right. So with our light do that we saw already, and drip. Okay. Drip's a total black box. Right? There's no audit. The code is not public. All we know is that they're charging us taxes left and right for anything we're doing. The people behind it, Forex Shark here, and BB and Team, whoever those are. Okay. And again, it's like, okay, you can communicate with a Telegram account. Okay. And again, they promise like super high return. Okay. And it's generated from what? Only your taxes. Only the taxes that are taken from any transaction that you make. They're very, very good at marketing. They're very, very good at getting influencers working for them. Okay. And that's the only reason it's still afloat. Because the marketing is so good, they keep getting more and more and more and more investors. But it's still not doing very well right now. Okay. Since January, they're like down to not much. Okay. Really not doing so well. And anyway, those are... That's all the examples I've got for you right now. But there are many, many, many others. Okay, some look more legit than others. I mean, Celsius and BlockFi did look a lot more legit, but they're still scams. They are. Okay, they did not manage the money properly. Okay, they had tens of billions of dollars. Okay, but they took way too much risk. Way too much risk. Okay. So you have to watch out for black boxes. They're bad idea, very bad idea. Okay. All right. So if you like this kind of stuff, please like and subscribe. Okay. Don't forget to ring the bell. Download the free book. All you have to do is put your name, your email address, and hit the submit button. Get a big fat button that says download the free book. If you miss that button, we're going to send you an email with another big fat button that says download the free book. And if you don't want to get the free book, you go to Amazon, you pay $5.99 to Jeff Bezos, and Jeff will send me $1. See ya.